Good morning this Wednesday, the 14th of June. I'm Grady Wolf, a market analyst with Beldirect. The first trading session on the ASX for the shortened trading week ended in a positive note yesterday, with the key index closing up 0.23% and 8 of the 11 sectors ending the day higher. Pizza giant Domino's tumbled over 7% on Tuesday after the company said it expects sales to fall below expectations for FY23 as cost of living pressures continue to bite. The market may have also been led yesterday, will offset some of the gains by NAB business confidence data out yesterday, showing Aussie business sentiment slid 4 points in May from a flat reading in April, in a sign of tougher times faced in the local economy from a business perspective. Westpac Consumer Confidence data, also out yesterday, had a similarly lacklustre reading, with consumer optimism only rising 0.2% for June from a 7.9% fall in May, but this was below expectations of a 3.2% rise. Local tech stocks rallied yesterday, taking lead from a strong session on the Nasdaq in New York on Monday. The tech rally in recent weeks has largely been driven by the hype around artificial intelligence, with the outlook for AI including hyper operational efficiency, massive cost reduction and overall significant performance enhancement. Over in the US, it is a crucial week for Wall Street as the Federal Reserve's next policy meeting to decide the latest rate decision began yesterday, and the rate announcement will be released this afternoon, with economists expecting a halt in rate hikes, which will maintain the US cash rate at 5% to 5.25% for the month ahead. The market is also responding to US core inflation figures, which were released late last night Australian time, showing US core inflation fell to 5.3% from 5.5% in April, and the annual inflation rate fell to 4%, the lowest level since March 2021, and below the forecast of 4.1% and down from 4.5% in April. The decline in inflation is less than half of the 9.1% peak in June 2022, driven by a decline in energy prices and slowing food inflation. The latest inflation data released in the US sparked a rally on Tuesday, pushing the S&P 500 further into bull market territory and cements bets for a rate hike pause out of the Fed. The Dow Jones rose 0.43% on Tuesday, the S&P 500 added 0.69%, and the tech-heavy Nasdaq rose 0.83%. Tech shares continue to lead the way in the US today, or yesterday, as easing inflation and the prospect of a rate hike pause boosts optimism for the high-growth sector. Over in Europe overnight, markets ended higher as investors digested strong UK employment figures and US inflation data ahead of the US Fed's rate hike decision. UK labour figures showed employment in the region rose 0.2 percentage points from February to April, and average wage growth accelerated from 6.7% to 7.2% over the period, which were both ahead of expectations. Some economists believe this data will add heat to the Bank of England to raise rates further at the next policy meeting next Thursday. Germany's DAX added 0.83% on Tuesday, the French CAC rose 0.56%, and in the UK the FTSE 100 rose 0.32%. On the commodities front this morning, energy stocks have come under pressure this week amid the declining price of oil, with the commodity down 6% over the last week to $67.32 a barrel. Amid the Fed's latest meeting, concerns over fuel demand growth in China and increasing supply output out of Russia pressuring the price of the commodity. This morning though, oil is up almost 3% at $69.08 a barrel. Gold is down 0.77% at $1,941 an ounce, and iron ore is down 3.46% at $111.50 a ton. One Aussie dollar is buying 68 US cents, 94.78 Japanese yen, 53.97 British pence, and 1 New Zealand dollar and 10 cents. And now let's dive into some trading ideas for your consideration today. Bell Potter has downgraded the price target on Cedar Woods from $5.40 to $5.20, but maintain a buy rating on the property and land development company following the release of a trading update whereby the company announced lower guidance for FY23 NPAT to approximately $30 million compared to the previous guidance of $37.4 million. Cedar Woods attributed the downgrade in guidance to weather conditions and supply supply chain constraints, having delayed settlements from Q4 FY23 to FY24. And Bell Potter has increased the price target on Doctor Care anywhere from 6 cents per share to 8 cents per share and maintain a speculative buy rating on the telehealth company after the company reported a 21% rise in patient consultations in Q1 FY23 from the prior corresponding period, in addition to record consultations in May of 65,200 patients. And that's all we have time for today. Have a wonderful Wednesday and happy investing.